Indian banks have been grappling with a piling bad debt scenario, and the list gets longer with each quarter. That's prompted lenders to make bigger provisionings and some cases take a hit on the books. But the picture is changing for the better, says CRISIL. The rating agency sees an overall NPA number falling to 8% by the start of the next financial year. Joining us now to talk about the rationale behind this is Krishnan Sitaraman. He's Senior Director at CRISIL Ratings. Krishnan, good having you. Thanks much for joining in. It doesn't surprise. The question is, do you reckon this will happen in the first half of the period that you expect, or will this happen with a bit of a lag? Because hitherto, growth in earnings or fall in NPAs hasn't quite happened at a pace which the market believes it would.
Good morning. The rationale behind our slipping NPA forecast is twofold. One is we believe that there will be a reduction in fresh accretion to NPAs. And number two, we believe that there will be recoveries coming in from resolutions of some of the big ticket NPAs which have been already referred to the NCLT process for resolution. And we believe that will happen over the course of the year. It's maybe one or two resolutions could happen in the first half, but our target or projections are based on the full financial year. And I think that's what's going to happen. But also the other factor, other than the resolutions, is the reducing accretion to NPAs. Now, that will happen because we believe that a bulk of the stressed assets in the system have been already recognized as NPAs, and the amount of new stressed assets which have not been recognized as NPAs and which need to be recognized as NPAs, those are progressively reducing. The other aspect is we believe corporate credit quality to be also steady, given a steady economic growth forecast and benign interest rates. We don't expect too many defaults to happen. Yes, there will be some defaults, there will be some slippages. We believe fresh accretions to NPAs will be around 3.2% this fiscal. That's against 3.7% in the last fiscal and a much more higher 7.4% in the previous fiscal. So to sum up, it will be a function of two factors. One is reducing accretion to NPAs, and number two, increased recoveries from NCLT resolutions.
I'm just looking at the financial stability report, and that to suggest the bringing down of the gross NPA levels by March 2020 to, I think, 9.2%. And they've given a breakup of which sectors, there is a slight bit of recovery anticipated from. Are you expecting, industrials, your metals and mining space and your infrastructure space to start looking slightly more healthier from the banking space point of view, from the bank loan point of view?
Yes, I think this recovery in terms of NPAs, or I would say an improvement in terms of NPAs, will be fairly broad-based in the corporate sector. And if we look at some of the specific sectors, we believe steel, the metal sector, is clearly an area where we believe greater resolutions to happen. And that's going to bring down the NPA levels. Having said that, we also see across sectors a number of accounts. Even if you look at the NCLT 1 and NCLT 2, there are around 40 accounts which are spread across sectors. Now, if there are some resolutions in the big ticket items, they actually go out of the NPA kind of categorization. So that actually brings down the NPAs. And this reduction in NPAs has already put down in stream, because if you look at March 18, NPA levels were 11.5%. If I look at March 19, it was 9.3%, and we expect around 8% as of March 20. So it's a kind of trend line which is happening. NPAs are actually gradually coming down.
Is there more comfort with regards to recapitalization of these banks as well?
Yes, so if you look at the 2.1 lakh crore recapitalization plan, which concluded in March 19, that has given a lot of financial heft for public sector banks, at least, to take increased provisioning. So if you look at the provisioning level as of March 19 for public sector banks, that is in fact in excess of 60%. And that number was close to 50% a year back. So there has been a significant increase in the provisioning level. So even if there is a kind of a large number of, if the recovery levels are not as per expectations post these resolutions, the provisioning levels are already high. So the incremental losses that the banks will need to take on the existing NPAs would be quite low.
Okay. The fact, you already made a mention of that with regards to the NPAs coming off and the new slippages waning. So is that a trend that you see, leading up to this 8% gross NPA number in a big material fashion and at a faster pace?
Yes, so that is one of the key reasons. The reduced slippages to NPAs will be one of the key reasons for NPAs to come down, the stockpile of NPAs to come down. But at 8%, it is still a reasonably high figure. If you go back in history to maybe 2 or 3 years back, it was 11.5% as of March 18, it was 9.5% as of March 17, and of March 16, it was 7.5%. Before that, it was 4.3%. So what we are seeing is a cycle. In the banking sector, even if you go back several years, there would be these cycles, NPAs going up, hitting a peak, coming down, hitting a trough, and then moving up. So I think currently we have hit the peak a year or so back in terms of NPAs. Now we are steadily coming down, and that's the stage of the cycle we are in.
And what about the overall improvement in credit growth? There's just been a marginal pickup from 13.2% from 13.1% in 2018. Is that number likely to see a bigger spike?
No, my numbers are somewhat different. It was around 12% for March 19, whereas it was single digit in March for 3 years successively before that. We believe the pickup will be somewhat higher pickup as compared to March 19. We are expecting in the range of 13 to 14%. It will not be a shooting up of credit growth, but a somewhat higher credit growth driven by both corporate credit picking up and the retail credit continuing to do strong. Those will be the key drivers of the credit growth going up somewhat. But coming back on the asset quality front, what we are looking at is corporate credit quality to improve. But a key monitorable will be how retail and SME asset quality move up. We believe that there could be some inching up of NPAs in those two segments. But overall, because corporate credit NPAs will come down, the overall NPAs will come down.
Okay, Krishnan, we'll let it be. Thank you. We'll leave it at this note. Thank you so much for taking the time out and speaking to us. And I think all of India fervently hopes that these numbers turn out sooner rather than later. Let's wait and watch if that happens. The equity markets doing reasonably okay for themselves. Currently about 0.5% higher. The Nifty Bank, the sector that we are talking about, is the principal gainer, giving that support. Let's wait and watch if this lasts during the course of the day. Keep in mind, the rest of the Asian bourses are doing much better than what our markets are doing. But it's a wrap on this leg of Indian Open. On that note, from Devina and me and the team that put this show together, thank you so much for watching. The FNO show takes forward the action on the other side.